Hi, this is Matt Amberson, the principal of ORATS. In this video, we're going to look at the Finder Pressure Report on ORATS.com. So the first thing we do is we'll log in. I have my login here. We'll type in a stock. We'll look at CAT today. We'll go to the drop-down menu. The profile is our normal report, but we'll go down to Finder Pressure, and then we'll press Go. And here comes up the trade finder. It's showing the top 10 buys and top 10 sells that are greater than 1 month and less than 1 year out. We sort them based on a probability of profit, and the probability of profit is based upon the forecast of volatility that ORATS produces and compared to the volatility that's implied for the option. The higher the probability of profit, the more expected profit that we'll have in an option. Anything over 50 would be like a zero positive or a value trade. Anything over 50% has some edge in it. So we're looking at the top buy would be the NOV 10 52.5 strike put. It has a score that is under 50%, so that's a slight sell actually, where the ORATS fall is 37% at that strike. Caterpillar is a $66 stock, so that's a out of the money put. The theoretical value that we calculate for the particular put is $2.02, and what we do is we calculate based on standard deviations what our market might be. The top sell is the May 70 call, slightly out of the money, with a relatively high score of 70%. The ORATS volatility, fair volatility at that point is 26, and what we'll do is we'll look down at the graphic below, and we can see the 70 call are the brown dots. The brown dots indicate the strike's implied volatility, and the solid orange line represents the ORATS fair volatility or forecast. So with the market being above what we think is fair value, it's a better sell than buy. And you can see the first option that we talked about, the NOV 52.5 put, is fairly close to the ORATS line, although it's still over. Buys would be underneath the line. Scrolling down a little bit further now, we can see the legend for this graphic is, again, we talked about the brown dots are the implied volatilities. The orange line is the ORATS forecasted volatility. The plus is the best option buy, so we saw that as the 52 put. The second best is the 60 put, and the best option sell is the May 70 call. Second best is the May 70 put here. Now scrolling down even further on the report, we're looking at related stocks to Caterpillar, and also Caterpillar's what we call the pressure gauge, how much the volatility has changed from one day to the next. So here's the current volatility in stock price for 4/16. Here's April, May, August, November, all of the option expirations that Caterpillar has. And you could see how from the 15th, when the stock was 68.19 and it dropped precipitously to 66.87, the volatility has gone up. There's only 1 day left in April, so we'll skip over that, but May's gone up 3.5%, 1.1 absolute volatility percentage points, and it's gone up in most of the months here. Our summarized volatility, basically drawing a time weighted line through it, has the 20-day interpolated as 27. In that we take out an earnings effect, that's why it's slightly lower than the market, and the long term is 30.2. We calculate a slope, or the relationship between the puts and calls. The average in the market right now is usually ranges between 3 and 4%, and it represents how much different an implied volatility is on every 10 deltas. So a 50 volatility might be 4 percentage points or 4% higher than the 40 volatility, or 40 delta, excuse me. So also that the slope has flattened out a little bit, and we can see that graphically below in just a moment. These are the 5 highest correlated stocks to CAT. These symbols that start with an R are power shares, so they don't have options that we've valued, but DEER is DE, and we see similar activity where DEER went down from 61.78 to 60.59, and the volatility has gone up in a similar fashion. Also, the slope has flattened out. So what we'll do is we'll scroll down even further now and look at the graphic in CAT. So what this will show, the light black line is where the volatility was yesterday, and the solid brown line is where the volatility is today. So you can see that it's gone up, but it's also flattened out slightly. You can see how it's getting wider as going from low strikes to high strikes. August has gone up, so we see that the volatility has gone up in each of the months. So that's the ORATS Trade Finder and Pressure Gauge. And if you have any questions, my name is Matt Amberson at matt@orats.com. And thanks for your interest in ORATS.